Alrighty, traders, let's get through our trade and market recap for Wednesday, January 24th, 2024. All right, so let's take a quick look at the markets, pull up SPY. We had a kind of an interesting day yesterday. Markets jumped up early on the day on Wednesday and then just slowly sold off to the end of the day. However, did technically make a new all-time high here. And we did briefly breach the 3 ATR before selling off and closing towards the lows of the day on the session. But overall, a pretty positive day. If we're looking at the underlyings, again, weekly, pretty strong, moving higher, but we are in overbought territory. And on the daily, we did touch the 3 ATR, which is a bit overbought as well. MACD is moving higher, the squeeze is firing higher, but we are just teetering in this overbought territory here. So we'll see how the market continues to go. Do we extend these leads? Do we get even more extended to the upside? Or is a pullback going to be warranted? And the question is, what's that pullback going to be? Is it going to be back to the 21? Is it going to be to the 9? Is it going to be all the way to the 50? On the daily, or do we even start looking at stuff on the weeklies here? Right now we are overextended, which makes me get a bit more cautious. The risk to me is to the downside, not the upside at this point in time. Can we go higher? Sure, but I'm getting a little concerned here that we'll pull back. Now, it doesn't mean we're crashing. There's going to be a black swan event and the world's going to end tomorrow. No, I think just a decent little pullback. It might be all that's needed, and then we move our way higher. Now, when we looked a little bit yesterday at some of the stuff that came out, we had flash services and manufacturing PMI come out yesterday. They were a bit hot. So PMI a bit hot, meaning the market is and the economy is running a tad hot. Today we're going to have GDP. We're expecting a slight gain to flat on GDP. And we're expecting a bit of a gain in unemployment claims this morning. So those will be out around 8:30 on Thursday morning. We'll keep an eye on those two things. So a lot of little things coming out on Thursday here. But GDP, unemployment claims, some new home sales. I think all of those bear watching. And then on Friday, tomorrow, you're going to get core PCE, which would be an interesting thing to pay attention to. So we've got some decent news coming out in the markets, and how the market's going to react to those will yet to be seen, but we're overextended, which makes me a bit nervous on the whole thing. If we take a look at the Qs, pretty much the exact same scenario. We did hit new highs during the day yesterday, but you're overbought on both the daily and the weekly, still climbing, MACD, RSI still rising, even though it's overbought, squeeze still firing to the upside. But we did finish well off of our highs on the session yesterday, and we are over the 3 ATR on the weekly and the daily. So the NASDAQ seems to be a bit overdone as well. Doesn't mean it can't stay there, and we know it can stay there for weeks at a time. And then if we're looking at small caps, on the IWM, it's been rolling over on the weekly for the most part for about the last 4 weeks, even though squeeze has been firing. We did gap up this week, so pretty good up move on the week, but we are way off of those highs, which we got as high as the previous resistance levels, and then we just simply failed at those levels. And we failed at them on Tuesday, and then we failed at them again on Wednesday here, and Wednesday dropping all the way back down to the 21. So really right here sitting at the 21 and the 9 EMA, which is where they're intersecting right now. But the 9 had been moving bearish down and now has a little bit of a bullish bent to it. So still overall, I think with the MACD improving, squeeze momentum on the downside turning, we could see some upward movement in the IWM finally. Stocks above their 50-day moving average dropped significantly yesterday. So we'll keep an eye on how that goes. It bumped up early enough to trigger a bullish PSAR reversal, but then closed near the lows of the session. We'll keep an eye. Put call ratio staying down, still pulling the moving averages down, which is a bit of a bearish tint on the session, but markets are still hanging in there. All right, VIX yesterday had a decent little bit of a bounce on the day. Looks to continue that on Thursday here, up a bit pre-market, but overall volatility still very, very low at 13 on the VIX. The dollar yesterday dropping decently on the session, so pretty good down day, but it finished well off of its lows on the session. So dollar has had a pretty strong run and now looks to maybe be taking a bit of a break here as it's struggling with the trend line. Now, anything up today, trend line seems to be pretty well intact. A good break here might signal some kind of a reversal on the dollar, but the dollar, it's good move up, series of higher highs and higher lows, but tipping over a bit here and just running flat for almost 2 weeks now. So we'll keep an eye on the dollar, and then rates yesterday moving up higher solidly on the day. And we've been talking about this, the MACD and the RSI moving higher on the weekly. We're about to potentially trigger, if we get a little bit more movement, up to about this 420 area. So if we get to the 42 area on TNX, we could trigger a bullish signal. So the rates continue to climb back up off of their lows. I think, again, this was overdone, and this is nothing new to us, which would mean that bonds will continue to fall. Let's take a quick look at the Forex. Pretty much flat on the day on the Aussie, up on the day on the British pound, down on the day on the Canadian dollar, and then the euro yesterday, a decent bounce up with the dollar weakening. Taking a look at oil, which is one of our favorites. On oil, we are sitting nicely in the center of the ATR bands. Almost. We're almost at the 21 EMA on the weekly, which is a really good centering mark. So we're regressing back to the mean here, or running back to the mean, however you want to mention it. And if we look at the daily here, starting to see a little bit of a pop over this resistance level today. So yesterday on Wednesday, ran up, tried to break it, finished right at it. This support level may be broken today. I think oil is in a bullish mode right now. It's been in a tight squeeze, looks to be potentially firing to the upside. We could get a nice move up on oil. That's how we're playing it. We've got plenty of trades on oil. It is our second largest holding, and only by a fraction. If we take a look at gold, now gold's going the opposite way. So gold's been weak and heading lower, and finished significantly lower yesterday, and looks to be starting off the Thursday session down a bit. MACD falling, RSI falling, squeeze triggered to the downside on the daily. If we look at the weekly here, you've got MACD rolling over, RSI rolling over to the downside, and the squeeze just ran out of juice here and is showing you some reversal of momentum. So down we go on gold here. I wanted to put some trades on yesterday in gold, but I'm going to hold off. Maybe we'll look today on gold to see where we are. I just didn't want to jump in on a decent looking sell-off going on in gold right now. PSAR is negative. Trend is negative. You're in this channel to the downside here, and as long as we stay inside this channel, we're going to continue to move to the downside. So that's what we're looking at here on gold. I think it's something to pay attention to. I'd like to see some selling down here, at least towards the 2,000 mark or something like that, and see if support down here holds anywhere in this 2,000 area. I think that'll be a good area to buy in or potentially put on some new trades, just giving it a little bit of time. And if we're looking at volatility on gold, even though gold's dropping, volatility is not increasing. So gold volatility, not too hot. Oil volatility continues to fall as oil's rallying. So we're not great volatility on those, but it's okay For us, volatility just means a little bit more profit and a little bit farther strikes, but it does not impact the probability of profit, just how quickly maybe you can hit your goals. It gives you a little bit of an edge. There, copper continues to look very, very strong. Copper had a really big, monstrous up day yesterday. MACD breaking the zero line to the upside, RSI rising. Squeeze has been reversing higher. It's looking higher in the aftermarket here. All right, so we're going to watch copper as it starts to head back to this previous resistance level that it's really held on to since all the way back in April of this year. And if you look at the weekly here, we're starting to get a bit of a reversal to the upside. We had been tailing off for a while, and now a break back above all of our moving averages. Strong move this week. Two good moves last 2 weeks to reverse the direction on copper. So that's heading higher so far. And then bonds, we talked about rates rising, which would mean bonds are dropping. They continue to slide. They continue to be in this downtrend. Here we can really extend this downtrend out away, and we continue to be in this channel. And until this channel is broken one way or the other, I'm still fairly negative on bonds, which means not really adding trades at this point on bonds. But I don't think we're crashing down to the 110 or 109 mark, which is where we have some naked puts as well. But it doesn't make sense to really put on negative put type trades or anything else in here. But I think strangles would be a good opportunity. Now, weekly is weak. We're heading down weekly, even though the squeeze had fired long, but the MACD and RSI heading lower. PSR is bullish or bearish signal here, bearish on the daily. So right now the trend in bonds is down, but I don't expect it to continue long term. I think this is a good short-term pullback. It was just an overdone move. Everybody that got into TLT or TMF, hopefully you got out or you didn't get in late back here because now you're down. And then that gas just continues to be crazy. So down heavily, now a spike up. It's just moving up and down. I'm just staying away for now. And if I'm looking at live cattle, we're in this. You're looking at a breakout here, really of the ascending wedge that we have, breakout to the upside. So we'll keep watching this. MACD slightly higher, RSI rising on the daily. You're breaking above the 200. So it's a good looking move on cattle after some pretty serious selling earlier in the fall or late in the fall last year, and now breaking out to the upside. But everything looks to be ready for this thing to keep moving higher, moving to the upside. You got the 21 EMA about to break the 50. So this is all really good bullish movement in live cattle. And we're sitting here with just a put debit spread on, that we already paid for with the naked puts from a 112. So really nothing to do. We might look at putting another 112 trade on in live cattle here. I like this movement. I wanted to make sure that we broke to the upside, not the downside, before I added that trade on. We're going to ignore sectors right now, and we'll just run quickly through the top stocks here. Apple down on the day yesterday a bit. Microsoft, again, continues to just barrel its way higher on the day. So Microsoft, another new high here, breaking over, very overextended on Microsoft. Squeeze is very long in the tooth. You are overbought. MACD and RSI, though, still rising. And then the weekly, still bullish move. I just think it's getting overbought, but right now there's no sense fighting this at this point in time. But I would expect a pullback at some point to happen here. I think you got to just keep an eye on it. But in the after hours trading, it's higher as well. We're heading into that earnings season. Microsoft earnings on the 14th of February, so we're a little ways away. Amazon moving up on the day yesterday. Kind of a bit of a ascending triangle here, breaking out and then failing at it yesterday, but We'll see if we can get back inside of here today. Still, the momentum is to the upside on Amazon. And if we're taking a look at Meta, it continues to just power its way higher. Meta is doing fantastic. New recent highs, but again, it's definitely overbought on both the weekly and the daily. I wouldn't be riding it here unless you have something that's kind of a low risk, high reward, like a butterfly trade. Google powering its way higher. Google's just been on an absolute tear since the earnings last time, and now we've got earnings coming up here on the 30th, so 5 more days, and we got earnings coming up, but this thing is just on fire, but it's also getting into overbought territory. NVIDIA blowing its way higher here. It's hitting new highs. I think it's also getting a bit overextended, but you just don't get in the way of the freight train right now. Nothing to do there. And then Tesla earnings last night. It fell on the day yesterday, and it's going to take a beating today. So heading all the way down to the 190 area. Now I think it's starting to get interesting. I think it's starting to reprice itself a bit where it should be. I think anything down here around the 180 area would be interesting. It's going to be around 190 at the open, so it's definitely going to gap down. And if you're in Tesla, you're getting absolutely creamed. Again, a terrible investment on your end to get into some of these. And I saw a bit of a chart yesterday on what it looks like with all of these new ETFs that are selling calls or options, selling options on underlyings. It's taking off. It's the big thing now. Everybody wants in. Everybody wants those giant distributions coming their way. But with that comes a cost, and the cost is you're limiting your upside by selling calls in a bullish market, and you're open to the downside if a stock tips over. And Tesla is just one of those stocks. It's going to get crushed. If you're in Tesla and you've been in it since the beginning, you are down significantly despite all of your distributions. They're not going to make up for the net asset value loss. All right, let's take a quick look at the Fed meeting info here as we take a look. We have a 97% chance that the Fed's going to do absolutely nothing at its meeting next week. So nothing for the Fed meeting there. If we look out to March right now, there's only a 42% chance that the Fed's going to cut in March. Okay, so right now, we have a 56% chance of the Fed doing nothing. I think this is really affecting rates. Let's take a quick look at not the historical, the comparison here, and just watch what's happening. But if you're watching the March dates, here's what's been happening. So back in December, we had a 75% chance of a rate cut. Okay, then all of a sudden, back in January, 2 weeks ago, we had dropped down to 53. Then we had dropped down to 40, and we're right now sitting at 42%. So you can see that the chance of a Fed rate cut is dropping week after week after week, but it's dropped from 75 or 76% all the way down to like 40, 42. And the chances of us just not doing anything is more than 50-50 now. So everybody that thought, oh, the Fed's going to cut 7 times this year, right? Well, you've got a hot PMI yesterday, and you've got more economic indicators coming out here. I'm not seeing it. We'll look at the employment report. I would think we'd have to see a pretty good uptick in unemployment to start to move this needle, and then we'll watch CPE and everything else coming out. But right now, all of you people that thought the rates were going back to zero and bonds were going to rally, and you bought your TLTs and TMFs, well, you got your bounce, which was completely premature and overdone. Now we're heading lower. I think this is exactly what I'm looking at, is that I didn't really think we would have more than 3 cuts this year, at least not at this time, until I see something different in the market. If we look out to the May cuts now, so for May, you are looking now a bit at somewhat of a cut here in May. So taking a look here, it's only a 14% chance we're going to have no cuts. It looks like at least a 50% chance of at least one cut. So by May, now we're looking about an 80% chance that we'll have at least one cut in the works, and a small chance of two by May. And then if we look out to June, here it looks pretty decent that we'll have at least 1 to 2 rate cuts potentially by June. I think that's all. I think that's all good. Then I think when it gets to July, it gets a little crazy here, in my opinion. You're looking at a pretty good chance that we'll have at least 3 rate cuts by July, with a small chance of a 4th, and then out to September. Here, you're looking at not much. It still looks like 3 rate cuts is the goal by September of this year. So again, your 7 rate cuts that you thought, that ain't happening. All right, let's take a quick look at the accounts and what we did yesterday. On 124, ended the day with a decent delta, 310 on the session. Theta at 817, totally fine. Would like to get more theta. It did tick up a bit there. We did lose a little net lick on the session yesterday, so down fractionally. BP increased modestly on the day to 203. We're still sitting at like a 40% BP on the trades that we have on. So we still have room to add more trades. I'd like to see some pullback in the market, and we'll see if we get that, and then I can look to play some more trades. And we did lose some cash yesterday. We lost $620. Let's talk about that on the session yesterday. The main reason was we did a call spread in the morning, a 0 DTE call spread. It went against us, dropped $1,400 against us on that one. So that was our first loss in several months on 0 DTE. So all good. So we took the L on that. We did manage to make a little bit of money on a call butterfly. Had I stuck in longer, this was a trade from Gabe in our Discord channel, who's the butterfly master. He made a lot more. He stuck in it. He followed his indicators a little bit better. I just decided to get out. I had a couple things I had to do and could not watch the market close enough. But I did manage to get back in, throw another call spread on, and pulled $700 out of that one. So that was a nice gainer on the day. So offset the loss quite a bit. So we lost a little bit, gave up a little bit on the session on the day. IRA on the session yesterday dropped just fractionally here, but we're close to new all-time highs. Delta is very, very, very low in the IRA. And this thing's looking pretty good. Now, I wanted to, since I've got you here, and you may or may not want to pay any attention to what I'm doing, but I want to take a look at what we did yesterday in this account. And what we did was placed a couple of trades. So I want to take a look at what we did get on yesterday. We didn't close anything on the session. I don't think we've closed anything for a bit. The last thing we closed here was this oil strangle for a winner. New trades, we're all set with those. So we didn't close anything else yesterday on in this account. So we're all good. And then in the small account, pretty close to a new all-time high. And we did close some trades. We'll get those logged in as well. So overall, doing really, really well. We did manage to put some new trades on yesterday, especially in the main account here. And what we were putting on was we put a BA 112. But we did it at a very, very high PDS. So a little bit more of an aggressive trap or an AT version. So if you don't like my acronyms, that's fine, but it helps us keep an idea of what we're doing. They're all versions of 112 trades. They're all bear traps. It's just that they're configured differently for different purposes. And yesterday, I put a pretty aggressive bear trap, pretty aggressive bear trap on yesterday and on NASDAQ. And the goal on NASDAQ yesterday was, if we're nearing a high, I'd like to catch any kind of a reversal here. If we keep moving higher, it's all good. That trade will still pay off, and it's still a credit trade. But if we move down slightly, or 5-10%, something like that, that trade's going to pay off well. So it's hedging my bets a little bit here on NASDAQ. And we looked at our accounts. I think we're hedged well. We've got a lot of hedges on right now, a lot of 60 DT. We've got a 60 DTE. We've got 2 of those hedges on. We've got several put debit spreads by themselves with no naked puts. Naked puts have been taken off. And then we've also got several other long puts on. So we're in pretty good shape. We're pretty well diversified on the account. And I think that's the key for you, is stay diversified out there. If you want to see some of the other things we're doing, and you want to check out one of our sessions, live sessions yesterday, I did post it live on the YouTube channel here. You can see my meeting with Joseph Puckett, one of our contributors as well. And Joseph, he does do some of the bear trap trades as well, and he does spread those out around a variety of different futures, but he's also doing some unique covered strangle opportunities. He's selling at the money naked puts on a couple different underlyings, gold, ES among them. And then if he's assigned, he's wheeling it with a covered strangle. And it's a pretty interesting piece. He's up decently. He's taken a bit of a risk earlier in the year, but I think he's got it back under control a little bit more here. So if you haven't seen what Joseph's doing, come and join us in the Discord, see what we're doing. Outside of that, you guys enjoy a great rest of your day. Good luck in trading today, and we'll see you tonight. Bye-bye.